Lyft and Uber stock have been performing excellently year to date in 2025, and investors want to know which one of these two ride-sharing slash food delivery companies is the better stock to buy for long-term investors. I'll answer that question in this video by comparing these two companies across critically important metrics, including revenue growth, operating profit margin, return on invested capital. I'll also share with you the differences in valuation. I'll share with you my proprietary discounted cash flow valuation models for Uber and Lyft. So the first thing I wanted to compare these two companies on is revenue. And we see a couple of things jump out right away. First of all is the phenomenal growth in these two companies. They've both demonstrated excellent growth over the previous decade. Secondly, we notice how much bigger Uber is in terms of total revenue. Uber generated 47.3 billion in trailing 12-month revenue, and Lyft generated 6.1 billion. Although Lyft has increased revenue at a compounded annual growth rate of 40% over the previous decade, whereas Uber has grown revenue at a compounded annual growth rate of 34% over that previous decade. Lyft has been more of a company that generates its growth on organic revenue, not making very many acquisitions or divestitures, whereas Uber has been more acquisitive and it's made more divestitures in countries where it didn't feel like it could be the number one or number two player. It sold that part of its business to other companies in exchange for stock in those companies, which I find to be an attractive move because, for one, you're exiting a market, and so your competitor is going to have an advantage now because you're exiting that market. And so you're giving up that market share, but you're taking equity in that business instead. And so you're giving up that market opportunity, but you're gaining the ownership of the business that's going to benefit from your exiting of that market. Uber has done that a few times, and they own equity stakes in companies that offer similar services as what it offered in certain countries, instead of it being the one providing those services at unattractive prices and profit metrics. The next metric I wanted to compare these two companies on is operating profit margin. And again, they've both done an excellent job in improving this metric. Uber generated a 9.5% operating profit margin over the previous 12-month period. That's up from negative 79% in 2016. Lyft, meanwhile, generated an operating margin of negative 0.8%. That's up from negative 200% in 2016. Click the link below to watch the full video.